Hey Puppy Trades, I wanted to do a video analysis update of the stock market. We're going to talk about the NASDAQ, Tesla, Apple, Nvidia, and Facebook. We'll also talk about American Airlines, JETS, and Boeing. We'll talk about Carnival Cruise Lines, Nike, and Proctor & Gamble. I'll update Pfizer real quick, and then we'll talk about EBON and Bitcoin as well. But first, I want to address a growth stock that went on a huge run in 2020, and I posted a setup about it on my Twitter account. I said this stock went on a huge rally in 2020 that formed a wave 1, and it completed an ABC correction to put in a wave 2 low. So I said as long as the wave 2 low held, you could take the length of wave 1, place it at the wave 2 low, and that would give you a reliable wave 3 target in time and price that a lot of people thought was really outlandish. And no, I'm not talking about NIO. I'm talking about TWLO. So I said TWLO went on a large wave 1 rally. It completed an ABC correction to put in a wave 2 low. So I said the entire length of wave 1 was going to be replicated in time and price as long as the wave 2 low held. So that would take TWLO to 444 4 months from this post. And I was incorrect. Okay, TWLO did hold the wave 2 low, and it did reach 444, but it didn't do it by January 27th. It did it the second week of February. But the bottom line is that the entire length of this run being replicated was very outlandish to a lot of people because TWLO had already gone on a big run. But that's exactly what happened. TWLO did go the length of wave 1, placed at the wave 2 low. I think a really similar phenomenon is happening with NIO right now. This is a 1, 2, 3, 4, 5 large degree wave 1 impulse. It completes an A, B, C correction to put in a wave 2 low between the 50% and 61.8% retracement of wave 1, which is where wave 2 typically ends. So if 31.91 holds as the low, taking the length of wave 1 and placing it with the wave 2 low will take NIO to 97 in the next 8 months. Now, if NIO reaches 97 from when I posted about it, that would be a gain of about 140%. If NIO breaks below 31, that would trigger a stop loss and be a loss of about 25%. So the risk-reward ratio is 5 to 1. Okay, if NIO did break below 31, I would still be looking to see if it held the 61.8% retracement, and I'd be looking for a very impulsive reaction out of this wave 2 box. Okay, and I would still be expecting a large rally higher. But the bottom line, what I want to make clear is this is just one setup in one stock in one sector of the market. Okay, and we saw a lot of this in the first quarter, and I'm starting to see it now, and it's worrying me. Okay, do not ignore the value side of this market. Do not ignore the industrial names. Do not ignore anything that isn't sexy. Okay, and what I'm saying is that in the first quarter, there were a lot of really good setups on oil stocks and cruise lines and airlines and banks, and they did extremely well. And a lot of people missed those and didn't choose them because they were too boring. Right? They weren't sexy. They were boomer stocks, right? Cathie Wood didn't invest in them. And if you make that mistake, that's going to be very harmful, okay? The value side of this market should not be ignored. And if you do ignore it, what you're asking for is a repeat of quarter 1. So if an investor, hypothetically, has built up exposure to AT&T and Nokia and Verizon in the 5G sector and American Airlines and Boeing in the industrial sector, and Walmart and Nike and Procter & Gamble in the consumer sector, and the precious metals and a large pharmaceutical company like Pfizer, and they need exposure to the growth sector and the renewable energy sector. In my unprofessional opinion, I think NIO is a great way to do it. But if someone says I'm a tech investor and their whole portfolio is Tesla and Apple and a bunch of electric vehicles, a bunch of solar stocks, a bunch of software stocks, anything that Cathie Wood's touch, then I think those stocks individually will do well, but you can't ignore the rest of this market. You don't need more exposure to the electric vehicles. So with that being said, let's talk about QQQ, and then in the second half of this video, we're really going to hone in on these boomer stocks, these value stocks, because they're not going anywhere in the long term or in the short term, and I'll explain why in the second half of this video. But first, I want to talk about this tweet. So I said on 4/6 that QQQ was going to go to the 161.8% extension of wave 1. That was going to be 340. It'd have a shallow wave 4 correction around 327. Go the length of wave 1, place of the wave 4 low, and that was going to take QQQ to 354. So this is the chart I've been sharing in every single video. I haven't touched this. Someone said that I had changed my idea, so I'm just going to quote directly from my last video. I said, at the very minimum, 324 will hold as the low. QQQ will bounce from this box between 328 and 334 impulsively. If we take the length of wave 1 and place it at the bottom of the wave 4 box, at the very minimum, QQQ will go to 354. If 333 holds as the low, then QQQ could go all the way to 360. The bottom line is we're looking at minimum for 324 to hold, and we're expecting this melt up to continue into wave 5 of wave 5, and we're looking to be very cautious somewhere between 354 and 360. So, clear as day. I've always had this projection to 354 being based on the bottom of this wave 4 box around 327. So it's really a moot point, because I don't think shorting the NASDAQ to gain a 1.5% drop would have been a good idea. I don't think selling, anything to gain this would have been a good idea either. I'm not a day trader, okay? I focus on, really the meat of the bones, not the, the breadcrumbs. But this is wave 1, wave 2, wave 3. ABC correction puts in a wave 4 low, and then QQQ goes on a wave 1, has an ABC correction, puts in a wave 2 low, and then wave 3 goes past the 161.8% extension of wave 1. We have this shallow wave 4 correction between the 38.2 and 23.6% retracement box. So it's the same story it's always been. I want to see, and I do believe we'll see, an impulsive reaction out of this box. We take the length of wave 1, we place it at the wave 4 low. That would take QQQ in the next 6 weeks to 354. Okay, all my time targets for the tech stocks in this video are going to be in the next 6 to 8 weeks. It's really important to understand there's an elephant in the room, okay? And that elephant's name is Facebook. So here's what I'm talking about. This is how we had Facebook counted, where Facebook completes a wave 1, has an ABC correction, and puts in a wave 2 low. It passes the 161.8% extension of wave 1 and puts in a wave 3, and then it has a shallow wave 4 correction between the 38.2 and 23.6% retracement box. So we were looking for the length of wave 1, placed at the wave 4 low, to give a conservative wave 5 target of 336. So 336 hasn't been hit yet. Very likely, in my opinion, that will be hit. But there's something more interesting going on. So there's 2 rules in this video. They're going to be really important to focus on. The first rule is that there's five waves in Elliott wave theory. Waves 1, 3, and 5 are the impulsive waves. In Elliott wave theory, it is believed that 2 of the 3 impulsive waves will be exactly the same length. Okay? The second rule is that in Elliott wave theory, a wave 5 should have, or some would say must have, a momentum divergence to be a wave 5. Okay, so what that means is always in Elliott wave theory, wave 5 breaks the high of wave 3 in price. Okay, the rule is that it must do that with momentum divergence. Now, I don't use this rule often because I don't want to be the guy that has momentum divergence on the chart, but it's really important to understand if this is wave 3 and this is wave 4, then this wave 5 should not have broken the wave 3 high of 315 on the relative strength index. And if we look at the relative strength index, if this is the wave 3 and this is the wave 4, then wave 5 should not have gone above 69.34 on the RSI. Okay? What we saw is that wave 5 has already passed above 69 and formed a new high on the relative strength index. It's burned through this momentum divergence. So the bottom line is there's a lot of evidence right now for Facebook that that's not a wave 3. And this isn't a wave 4 correction. It's another wave 1 and another wave 2. And Facebook is exploding out of a nest. So really, 336 is going to end up being extremely conservative. If you take the length of wave 1, you place it at the wave 2 low, that's going to take Facebook to 357. I believe that's going to happen in the next 6 weeks. I think 8 weeks conservatively. That Facebook's going to go all the way to 357. So there's 2 possibilities. Facebook could dramatically outperform QQQ. That's definitely a possibility. It is. But the other possibility is now we have to look at QQQ and say, keep track of something pretty important. let's say that QQQ does have an impulsive rally from this box, okay? And let's say it makes a new high for wave 5, but let's say it also makes a new high on the relative strength index. Well, if QQQ breaks above 68.90 on the relative strength index, which would be above this high of 342, and this is the 9-month chart, then if a new high is made on the relative strength index, there would be a lot of likelihood that QQQ wouldn't be completing a 3 and a 4. It'd be another wave 1 and another wave 2, just like Facebook, okay? I'm not really ready to say that's the official count because that hasn't been done yet on QQQ, but it has been done on Facebook. So this is something to keep in the back of your mind that Facebook is already confirming a next. And if QQQ breaks above 342, and it also breaks to a new high on the relative strength index of about 68.90 on the 9-month chart, then that's going to really mitigate the likelihood that's a wave 3 and that's a wave 4, and it's going to bring a lot more likelihood this is another wave 1 and another wave 2, just like Facebook. Okay? So let's look at Nvidia and talk about that second rule. 2 of the 3 impulse waves will be the same length. So this is Nvidia right now. It goes on a wave 1, has a wave 2 correction, and it blows past the 161.8% extension of wave 1. So this is definitely an impulsive wave. And now it looks like it's completing an A, B, C corrective structure. So wave 4 and L8 wave theory should not pass the 50% retracement of wave 3. That's kind of ideal. And Nvidia has formed a big wick right at the 50% retracement of wave 3. So this is still technically possible that this is a wave 4, in my opinion. So this is how I like Nvidia counted now. A wave 3, an ABC correction is putting in a wave 4 low. But what we have to keep track of Nvidia is when this wave 3 high of 648 is broken, will the relative strength index make a new high as well? If Nvidia's relative strength index, and this is the 9-month chart, breaks above 73, it's really going to mitigate the likelihood that that's a wave 3 and that's a wave 4, but that that's another wave 1 and an ABC correction is putting in another wave 2, just like Facebook. We don't have the evidence for that right now, but we do have this evidence. 2 of the 3 impulse waves will be the same length. If Nvidia is the same length as Apple, I mean, if Nvidia's same wave 1 is the same length as wave 5, Nvidia wouldn't break above the wave 5 high. And that's really important to realize. So I believe, regardless, Nvidia's wave 5 right now would be the length of wave 3, placed at the ABC correction, wave 4 low. So right now, I really don't think Nvidia is going to break below this low of 560. I really don't want to see the 61.8% retracement of 551 broken. But what I expect Nvidia is going to do is go to the length of wave 3, place at the ABC correction, wave 4 low, and that will take Nvidia to 720 in the next 6 weeks. 8 weeks conservatively, in my opinion. So I expect Nvidia is going to be breaking above this high regardless. What we need to watch is to see, will the relative strength index break above this high of 73 as well? Okay, if it does, very likely, just like Facebook, that's a wave 1, an ABC correction, putting in another wave 2 low. Regardless, the length of this move, placed at this corrective low, would take Nvidia to about 720 in the next 6 to 8 weeks. Let's talk about Apple real quick. Apple is a pretty similar story to Nvidia. So this is my primary count for Apple. It has a wave 1, a wave 2, and then it passes the 161.8% extension of wave 1. So this is definitely an impulse structure. And then I believe right now the best way to count Apple is that this is a wave 3. An ABC correction is putting in a wave 4 low. It's wicked at exactly the 50% retracement, and it's wicked at the wave 1 high. So this is still, possibly a wave 4 low being put in. If we look at Facebook right now, in the back of our mind, we kind of have to think, just like Facebook, that this divergence down here is going to be burned through, and Apple's going to form another wave 1 and another wave 2. So it's really important to look at Apple and see if 137 is broken. Will this high of 66 be broken on the relative strength index? If it is, very likely that's not a wave 3 and that's not a wave 4, that's another wave 1 and that's another wave 2. But I believe Apple, like Nvidia, is not going to be the length of wave 1 for the wave 4 low to get the wave 5 target. I think it's going to be the length of wave 3 of the ABC correction, wave 4 low to give the wave 5 target. That would take Apple to 144. Now, for Apple to be a wave 4, we really shouldn't see 127 close below, okay? If we're open to the possibility that this is another wave 1 and another wave 2, the invalidation level is going to be between 125 and 122, because that is the 61.8 to 78.6% retracement of wave, what would be wave 1, which is where a wave 2 would typically end. Either way, I think Apple, just like Nvidia, is going to go the length of wave 1, placed at the ABC correction wave 2 low. 122 would be the invalidation level. 125, I would say right now, would be the stop. But this is wave 1, an ABC correction, putting it in a wave 2 low. The length of wave 3, we have to make sure that the relative strength index breaks above 66 before we know this is a wave 1 and a wave 2. Regardless, I think this is going to be the length of this move, placed at this low, just like Nvidia, and it'll take Apple to 144. Okay, so once Apple, assuming Apple does this, and it gets this support with QQQ, what would that look like on the bigger picture? Well, it'd be looking like a 1, 2, 3, 4, 5 large degree wave 1 impulse. Apple would then be expected to pull back with the rest of the NASDAQ, and then it would be completing an ABC correction after QQQ reached 354, and we'd be looking for this wave 2 low to hold, and this would be the launch pad for this summer for Apple. Okay, so this is Tesla. Tesla right here is the only stock in the big tech sector that hasn't broken above the 161.8% extension of wave 1. Okay, once Tesla breaks above the 161.8% extension of wave 1 of 828, then that would confirm a 5 waves impulse from this low, and it, like Apple, would be a 1, 2, 3, 4, 5, and then we'd be looking for an ABC correction with the NASDAQ, and then that would be this wave 2 low would be the launch pad for Tesla this summer. Now, we do have to, Tesla's at a make or break level right now, okay? Because if this is the wave 1 and this is an ABC correction, this wave 2 low has to be between 663 and 631, okay? Once we're below this wave 2 low, the bears are right, okay? And they're definitely right once we're below this low. I think right now, this is kind of the last stand for Tesla. This is wave 1, this is wave 2, this is wave 1, this is an ABC correction putting it in a wave 2 low. Tesla should get a lot of support in the 61.8 to 78.6% retracement between 631 and 663. If it does, I am expecting 1, 2, 1, 2. This is going to launch Tesla above this wave 3, 161.8% extension, have a shallow wave 4 correction, and then have a 5th wave higher. Okay, we need to make sure 631 is not broken because that would really lessen the likelihood that this is a wave 2 being complete. As long as it is, I do expect Tesla, in the coming weeks, with all the rest of these big tech stocks, with the NASDAQ having a lot of support as well, would emerge as a leader, reach 828, have a shallow wave 4 correction, have a 5th wave higher. We can't see 631 broken, or the argument that this is a wave 2 would steeply diminish. Okay, let's look at some of the industrial side of this market. So here's why I'm pretty adamant that if you ignore the industrial side of this market, you're going to get pretty burned. Okay, so if we look at this post that I had about the bar chart straddle index, it was very very informative. So this picture was taken on January 21st of 2021. This is the bar chart straddle screener. Okay, so we see Boeing, Norwegian Cruise Lines, and Delta Airlines. These travel and leisure stocks are showing up on this sector as a group, and then a large move happens and it's to the upside. What's even more damning is that JP Morgan, Citibank, Wells Fargo, JP Morgan, Citi, Wells Fargo, Bank of America, JP Morgan, Bank of America, and Morgan Stanley, all these banks showed up on this sector together. They all had a massive move higher. Okay, this straddle screener is a really important tool for me for timing the next sector rotation. Okay, the reason I bring that up is because if we look at this screener right now, it gets pretty damning evidence that the airlines and the industrial sector is not done. Okay, this is United Airlines, American Airlines, United Airlines, American Airlines, Boeing, Delta Airlines, American Airlines, Delta Airlines, Spirit Airlines, Boeing, a cruise line, another cruise line, another cruise line, and another cruise line. Pretty glaring evidence the travel and leisure sector is about to have a huge move. Okay, so that's why in the beginning of this video I'm stressing, do not ignore the industrial side of this market, or you will get burned badly. Okay, so let's analyze my favorite plays in this sector. This is Boeing. So I believe Boeing. Let's talk about the big picture view of Boeing first. Why I'm pretty adamant that this is not a good habit of saying I'm a tech investor and ignoring these industrial stocks. Okay, this is Boeing on the big picture view. A 1, a 2, a 3, a 4, a 5, large degree wave one impulse being put in on the biggest time frame. And then it completes an ABC correction and it's putting in a generational wave 2 low. Did it put in last April? In the March sell-off. This is the generational wave 2 low being put in. Boeing has entered a huge new bullish super cycle. Okay, and that's really important to understand. This is a big reason why I think being macro bearish the stock market on the big picture investing time frame is really silly. But this is the wave 1, wave 2, wave 3, wave 4, wave 5, large degree wave 1. ABC correction puts in a huge generational wave 2 low for Boeing. You can recreate this on American Airlines and JetBlue and all the airlines. The industrial sector is not going anywhere. So get used to them having money in this market. Make sure you diversify. This is the wave 1, and ABC correction puts in a wave 2 low. This is another wave 1 and another wave 2 low. And then we've closed above both of these wave 1 highs. So I believe Boeing is going to go the length of this wave 1, place of the wave 2 low. It's going to reach the 161.8% extension of wave 1, which is 307 for the minimum wave 3 target. Okay? Right now, this looks like it's another wave 1, has an ABC correction, and we're putting in a wave 2 low right at the 61.8% retracement of this wave. So 210, we're going to use that as the stop. For bigger picture views, 191 is a really important invalidation level, and this could be a kind of a long-term investing opportunity, in my unprofessional opinion, for the big bird view, where we break above this high and just start exploding on the larger term cycle. But in the shorter term, I like Boeing as a swing. Okay, this is a 1, an ABC correction wave 2, a 1 and a 2, a 1, another ABC correction, putting in another wave 2 low at this 61.8% retracement. As long as we're above 210, Boeing is having a huge nest right now, and it's going to go to the median of this Andrews pitchfork, and very conservatively, in my opinion, it's going to reach 307. I believe that will happen in the next 2 months. Okay, let's look at the Jets airline ETF. This is also really supporting this idea. Okay, so this is a wave 1, an ABC correction puts in a wave 2 low. Wave 3 passes the 161.8% extension of wave 1. So this is exactly why we think it's so important, that Apple and Facebook and Nvidia and hopefully soon Tesla, but the NASDAQ already has as well, reached the 161.8% extension of wave 1, because that confirms this is the wave 3. We're now looking for a shallow wave 4 correction between the 38.2 to 23.6% retracement zone. If we hold above the wave 1 high, which is also the 50% retracement of wave 3, we have a very clear stop and invalidation level of 22. 22 holds. JETS, the airline ETF, will the length of wave 1, place the wave 4 low. This sector, very conservatively, will reach 34 in the next 2 months. Okay, that perfectly lines up with what we're seeing in Boeing, and that also lines up with what we're going to go over in American Airlines right now. So this is American Airlines. The time target for all these airlines and Carnival Cruise Lines is 2 months. So this is the wave 1, an ABC correction puts in a wave 2 low. I expect American Airlines will go to the 161.8% extension of wave 1 and reach 31. It'll have a shallow wave 4 correction before a 5th wave higher. So this is 1, ABC, wave 2. Wave 3 will go to the 161.8% extension of wave 1. We'd have a shallow wave 4 correction between 26 and 23 before a 5th wave higher. So right now, bulls want to see 18 not be broken. If 18 isn't broken, I expect in the next 2 months, we're going to see American Airlines reach 31. That wouldn't be the top. We'd have a shallow wave 4 correction before a 5th wave higher. Okay? This is Carnival Cruise Lines. This is very almost identical to American Airlines. Wave 1, ABC correction. Wave 2, and then we have a bull flag forming on the weekly where the equal legs bull flag target would take Carnival Cruise Lines to exactly the 161.8% extension of wave 1. That'd be 36. So I think in the next 2 months, we're definitely going to see Carnival Cruise Lines go on this run up to 36. We'd have a shallow wave 4 correction between 26 and 30 before a 5th wave took Carnival Cruise Lines all the way to 44. Okay, so I like these airlines and these cruise lines in the shorter term swing. Here's another stock I really like in a lot of time frames. We'll talk about Procter & Gamble right now. So these consumer stocks, they're going to take up some money in this market. Okay, I really like these stocks. This is Procter & Gamble, 1, 2, 3, 4, 5, large degree wave 1, and ABC correction is putting in the wave too low. Okay, so Procter & Gamble, I want to see in the very short term 128 to 125 not be broken, but the invalidation level is all the way down at 121. If that isn't broken, this is the wave 1. This is the ABC correction putting in a wave too low. Procter & Gamble is going to go to the median of this pitchfork. It's going to reach the equal legs target of 174. This run is less than 8 months. So in the next 8 months, I expect Procter & Gamble will hold above 121, and it will reach 174. Let's talk about Nike right now. This is the Nike. It goes on a 1, 2, wave 3, passes the 161.8% extension of wave 1. It has the ABC correction to put in a wave 4 low. We take the length of wave 1, we place it at the wave 4 low. That takes Nike all the way to 169. Okay, I really like this setup. Okay, very clear invalidation of 125. Can't be broken. We can't see 125 broken. If it isn't, the length of wave 1, placed at the wave 4 low, we'll take Nike to 169. Okay, I like this setup a lot. 169 will be hit in the next 4 months based on the time and price target of wave 1. I also like that wave 4 is ending at the 38.2% retracement of wave 3. So, Pfizer, real quick, this is Pfizer in the short term. I don't think it's a setup here. I don't think it's a setup, but in case someone was interested, we've talked about Pfizer a lot. So this is a wave 1. It has an ABC correction putting in a wave too low, right at the 61.8% retracement of wave 1. The equal legs target, in my opinion, is going to take Pfizer all the way to 48. A big winner for me. I'm looking to take the next round of profits at 48. I believe 48 is really going to be hit this summer. Pfizer having a huge breakout was on the bar chart straddle screener down here, low implied volatility, and it resolved to the upside. So really like that one. And then the long-term investing picture is just gorgeous, right? This is why we do what we do, right? This is a dividend aristocrat. This is a pharmaceutical giant. This probably has low correlation to a lot of stocks that are going to be really good holds, but this is a wave 1, an ABC correction putting in a wave too low, another wave 1, another ABC correction putting in another wave too low. I'm looking to hold these dividends and keep getting these capital gains, keep getting these dividends paid until Pfizer goes all the way to the median of this pitchfork in the longer term cycles. This is a dividend aristocrat. This has 30 years of dividend history. It just broke out of a crazy 20-year base, right? This is why we invest. This is why we learn Elliott wave theory. This is a huge monster. In my unprofessional opinion, you got him between 33 and 35. This is wealth. This is going to the median of the pitchfork. 60 is conservative, very conservative. I think 90 is going to be hitting the longer term cycles, but the median of this pitchfork, I'm looking to collect dividends until that's reached. So I want to talk about EBON and Bitcoin real quick. So EBON, this is what it looks like when I get a stock wrong. I originally had that this was a wave 1, an ABC correction put in a wave too low. So wave 1, A, B, C correction. I had this putting in a wave too low. Okay, so once this low was broken, this count got invalidated. So this, I'm looking for this now to be an A, B, C correction being complete. This is a pretty new IPO stock. So here's how I'm really trading EBON, to be completely honest. And I entered EBON with this, thought process that Bitcoin is really lagging. Bitcoin is really lagging the crypto sector right now. Litecoin, Ethereum Classic, and Dogecoin. All these altcoins are hogging up the money in the crypto space. I don't believe that trend's going to last. Okay, this is a wave 1 for Bitcoin. An ABC correction puts in a wave too low. The wave 3 target would take Bitcoin pretty conservatively to 69,000 in the next 4 to 6 weeks. We'd have a 1 ABC wave 2. The very conservative target would be 69K. I think minimum that's hit in the next 6 weeks. We'd have a shallow wave 4 correction before a 5th wave higher. Bitcoin, very clearly, we don't want to see 47K broken. Okay, so as long as Bitcoin's above 47K, I'm expecting that it's going to go to 69,000, have a shallow wave 4 correction, and then go all the way to 82,000 for this 1, 2, 3, 4, 5. Okay, and Ebon, SOS Limited, SOS Limited, I think mines a little bit of Ethereum, but Ebon is a full-on Bitcoin miner. So my thought process has always been that when Bitcoin goes on this run to 82K, we would see a huge shift in outperformance in the Bitcoin and the Bitcoin mining stocks especially. So as long as this run to 82K is still intact, I'm still happy with Ebon. I also entered Ebon as a pretty long-term hold because I believe that these crypto miners are really the last way to get exposure to Bitcoin, to be honest. I really do. So, yeah, that's that.